I'm thrilled. I mean, particularly after living this past year with COVID, to see how the copper market has come about. I was always confident, David knows this, in our business and our assets and our people, but to have this emerge so quickly is head spinning, and I can't stop smiling.
What is up, guys? My name is Ignas, welcome back to the channel. This week we are looking into materials, and for today that will be copper. Copper has been on a rise recently and these particular miners are benefiting from it. A month back, Richard Atkerson, the chairman and CEO of Freeport-McMoRan, went on CNBC to discuss the reasoning behind this huge run in copper demand. This is what he says.
We are really entering into a whole new era for copper. Freeport is the foremost copper company in the world. Carbon reduction is an important part of that. Any investments to reduce carbon require significant amounts of copper. Power generation, electric cars, supporting infrastructure. And Goldman Sachs estimates that, in the foreseeable future, 5 million tons a year of demand just from carbon investments. But it's way beyond that. Historically, at least since the early 2000s, China has been the only story for copper demand growth. Now that demand growth is expanding to the developed world, the developing world. Carbon is one piece of that. Electrification, 5G, infrastructure development, and COVID recovery, all these factors are coming in to make this we've had a great run in copper, but we're really looking to a really positive future here.
So copper is used in electrical equipment for wiring and motors. It also has uses in construction with plumbing and roofing, so these will go into infrastructure, 5G technologies and also carbon reduction. But with the recent rally, maybe we are already too late to get in. Richard has a different opinion.
When people talk about a commodity supercycle, they're generally talking about a broad range of commodities. We're focused on copper. And one thing our board has made a commitment to, and I just became chairman, is that's going to be our business. We're not going to get diverted into diversification efforts. So I'll speak for copper. And as I said, I'm thrilled. I mean, particularly after living this past year with COVID, to see how the copper market has come about. I was always confident, David knows this, in our business and our assets and our people. But to have this emerge so quickly is head spinning, and I can't stop smiling. And then this is not the end of this. I mean, because while we talk about carbon reduction investments, they're not a part of the market today. That's coming. And we've seen copper go from, 235 predictions from lower a year ago to 450 now. And we got this big wave of new sources of demand from not just carbon reduction, but just fundamentals underlying the world. So yeah, I think copper's in a super cycle. I'm not going to speak about other commodities.
So for today I have picked 3 copper producers: BHP Group, ticker symbol BHP, Rio Tinto Group, RIO, and Freeport-McMoRan, ticker FCX. In order to make the comparison possible, we will be looking into 8 different factors: analysts' price targets, price to earnings ratio, annual revenue growth, price to sales ratio, return on equity, revenue per share, current ratio, and dividend yield. The best company under each factor will get a point, so it is possible to have from 0 to 8 points, and in the end, the stock with the most points will be considered the winner of this comparison. I hope that the rules were clear, so let's begin. The first factor are the analysts' price targets. As investors, we want to check how far the current share price is away from the average target of analysts. If the current price is under the average analyst target, we will consider the stock as undervalued, and in the end, the company with share prices furthest away from the average analyst target to the lower side gets a point for this factor. For BHP, we have 2 price targets of analysts. They range from the lows of $86 to the highs of $92 per share. The average is at $89.05, and the current share price is at $74.30. This means that there is still around a 19.9% room for the current price to reach the average target of analysts. For Rio Tinto, we have 4 price targets of analysts. They range from the lows of 80 to the highs of $125 per share. The average is at $102.27, and the current share price is at $86.97. This means that there is still around 17.6% room for the current price to reach the average target of analysts. For Freeport, we have 17 price targets of analysts. They range from the lows of 29 to the highs of $60 per share. The average is at $43.64, and the current share price is at $40.97. This means that the current price needs to go up for 6.5% to reach the average target of analysts. Results for the analysts' price targets factor are in the table, and with most room for growth, BHP gets the first point. Second factor is the price-to-earnings ratio. It is calculated by taking the current share price and dividing it by the earnings per share of the trailing 12 months. The formula suggests to be looking for a company with a low market cap and a high result in earnings. So in the end, the stock with the lowest price-to-earnings ratio gets a point for this factor. For BHP Group, the price-to-earnings is at 27.02. Price-to-earnings for Rio Tinto is at 14.5. And Freeport has a price-to-earnings at 33.36. Price-to-earnings ratios are in the table, and with the lowest value, Rio Tinto gets the first point. Third factor is the annual revenue growth. As investors, we want to find that the revenues of a company are on a steady increase. We will take a look into the revenues of the 4 most recent years and compare them one by one. If revenue was on the increase from one year to the next, we will consider it as a +1, and if it was on the decrease, it will be a +0. Then we sum the results up to a minimum of 0 and a maximum of 3, and in the end, the stock with the highest sum gets a point for this factor. We have annual revenues for BHP, and going into 2018, there was an increase to $43.13 billion US. Then into 2019, there was another increase to $44.29 billion, and going into 2020, we had a decrease to $42.93 billion. So with 2 increases and 1 decrease in annual revenues, we get a sum of 2. Annual revenues for Rio Tinto, and going into 2018, there was an increase to $40.52 billion US. Then into 2019, we had an increase to $43.16 billion, and going into 2020, there was another increase to $44.61 billion. So with 3 increases in annual revenues, we get a sum of 3. Revenues for Freeport, and going into 2018, there was an increase to $18.63 billion US. Then into 2019, we had a decrease to $14.4 billion, and going into 2020, there was another decrease to $14.2 billion. So with 1 increase and 2 decreases in annual revenues, we get a sum of 1. Results for the annual revenue growth factor are in the table, and with a sum of 3, Rio gets another point. Fourth factor is the price-to-sales ratio. It is calculated by taking the company's market cap and dividing it by the trailing 12 months worth of sales. The formula suggests to be looking for a company with a low market cap and a high result in sales. So in the end, the stock with the lowest price-to-sales ratio gets a point for this factor. BHP Group has a price-to-sales at 4.01. Price-to-sales for Rio Tinto is at 3.13. And Freeport has a price-to-sales at 3.69. Price-to-sales ratios are in the table, and with the lowest value, Rio gets 1 more point. Fifth factor is return on equity. It is calculated by taking the net income and dividing it by the shareholders' equity. A high ROE shows that the company is well managed and that money from investors are efficiently handled. So in the end, the stock with the highest return on equity percentage gets a point for this factor. For BHP, the return on equity is at 15.82%. Return on equity for Rio is at 21.41%, and Freeport has a return on equity at 12.96%. Return on equity percentages are in the table, and with the highest value, another point goes to Rio Tinto. Sixth factor is the revenue per share. It is calculated by taking the total revenue of the trailing 12 months and dividing it by the total shares outstanding. The formula suggests to be looking for a company with high revenues and a low number of shares. So in the end, the stock with the highest result gets a point for this factor. For BHP, the revenue per share is at 18.3. Revenue per share for Rio is at 27.58, and Freeport has a revenue per share at 11.16. Revenues per share are in the table, and with the highest value, Rio Tinto gets 1 more point. Seventh factor is the current ratio. It is calculated by taking the current assets and dividing them by the current liabilities. As investors, we want to find that the company is able to cover its debts with assets, but also that they are actually being leveraged. So in the end, the company with the highest current ratio between 1.5 and 3 gets a point for this factor. For BHP, the current ratio is at 1.42. Current ratio for Rio is at 1.8. And Freeport has a current ratio at 2.35. Current ratios are in the table, and with the highest value under 3, Freeport gets the first point. The last factor we have is the dividend yield. It is calculated by taking the annual dividend per share and dividing it by the share price. A high yield may suggest that profits are being shared with shareholders, and that is a great passive income source that we as investors are looking for. So in the end, the stock with the highest dividend yield percentage gets a point for this factor. BHP Group is paying an annual dividend of $3.12 per share, which is a yield of 4.1%. The annual dividend for Rio Tinto is at $4.64 per share, which is a yield of 5.24%. And Freeport pays an annual dividend of 30 cents per share, which is a yield of 0.72%. Dividend yields are in the table, and with the highest percentage, Rio gets another point. We can calculate the results, so BHP has 1 point, Rio 6, and Freeport 1. This means that with a sum of 6, Rio Tinto is considered the winner of this comparison. And that was it. If you got value or new ideas, then make sure to push that thumbs up, it helps the channel a lot. Now there is a question for you: do you own or planning to buy any of the copper companies? Share your stance in a comment below. If you are interested to know exactly when I buy or sell in a stock, then consider the options on Patreon. This week we already had a comparison on lithium producers with Albemarle, SQM and Livent. And we also have 41 week worth of investing with the Revolut stock portfolio. If you are interested in any of these, then click on a video currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.